Bitcoin just hit 100,000, or maybe it crashed again. But here's the catch. This isn't just about the price. It's about why it's happening and what could be coming next. In this video, we're diving deep into the most explosive story in global finance today, Bitcoin's insane resurgence, or collapse. Whether you're a hardcore crypto investor or just curious why your social feed is suddenly full of laser eyes again, this isn't just a hype cycle breakdown. We'll expose the real forces, governments, billionaires, banks, wars, and algorithms behind Bitcoin's biggest moment in history. By the end, you'll understand not only what's happening, but also what happens next and how it affects you. A recap of the crypto roller coaster. To understand this moment, you have to understand the madness that came before. 2017, Bitcoin hits 20K. The media calls it a bubble. 2018, it crashes to 3K. Crypto's dead, they say. 20, COVID-19 hits. Central banks print trillions. 2021, Bitcoin soars to 69,000. NFTs, DeFi, Elon Musk tweets, euphoria. T2, the bubble bursts, Terra Luna collapses. FTX, one of the largest crypto exchanges, goes bankrupt. Crypto enters its darkest winter. 23, silence, regulation, lawsuits, bans. Crypto is buried by mainstream media. Again, and then, quiet accumulation. Spot Bitcoin ETFs approved. Halving. 25. Boom. 100,000. Or a spectacular crash. But let's go step by step. In 2012, after the halving, BTC rose from $12 to 1,100. In 2016, BTC surged from 650 to 20,000. In 2020, BTC rose from 8,000 to nearly 69,000. Now in 2024, the halving happened again, and true to form, Bitcoin began to rise. It's programmed scarcity, and in the financial world, scarcity creates value. 2. BlackRock and Fidelity and institutional money. 24 saw something crypto diehards have prayed for over a decade. Traditional finance embraced Bitcoin. BlackRock, yes, that BlackRock, launched a spot Bitcoin ETF. Fidelity followed. So did ARK Invest, Grayscale, and others. For the first time ever, pension funds, retirement accounts, and institutions can legally buy Bitcoin like they buy gold or stocks. Billions poured in. Think about this. The US has over $30 trillion in retirement assets. If just what goes into Bitcoin, that's $300 billion, more than 10 of the Bitcoin's current market cap. 3. Inflation, interest rates, and global currency. Weakness, the world's financial system is in trouble. US debt exceeds $34 trillion. Countries like Argentina, Turkey, and Lebanon are seeing hyperinflation. China's real estate sector is collapsing. The dollar is strong, but increasingly distrusted. Bitcoin is gaining traction not just as a speculative asset, but as a hedge against fiat collapse, especially in countries where banking systems are unstable. 4. Geopolitical chaos and the search for a safe haven. In 2024-2025, the world got more chaotic. Ukraine-Russia war continues with no end in sight. Tensions in Taiwan are boiling. Israel-Iran standoff escalates. Oil prices spike due to Middle East conflict. Stock markets tumble. Interest rates remain high. And trust in institutions keeps falling. In times of uncertainty, people seek store of value assets, gold, silver, and increasingly, Bitcoin. 5. The youth take over finance. Younger generations are more likely to invest in Bitcoin than in bonds. Why? They don't trust Wall Street. They've seen inflation erode savings. They understand technology. Bitcoin is becoming their gold. And Gen Z and millennials are now the dominant force in retail investing. Who's winning and who's losing? Let's break this down. Who's winning? Early adopters who bought in 2018 to 2020. Smart institutional investors using Bitcoin as portfolio hedge. Developing nations using Bitcoin as a parallel financial system, e.g. El Salvador. Tech-savvy youth making income from DeFi. Staking. Trading. Who's losing? People who bought at the top with no strategy. Investors who followed hype, not research. Projects tied to altcoins that crashed or got rugged. Tokenized assets. Stocks, real estate, and art now live on blockchain. Bitcoin Layer 2s, like Lightning Network, enabling faster, cheaper payments. AI plus blockchain. Decentralized AI projects emerging rapidly. CBDCs. Threat or complement? Depends on regulation and public acceptance. Here's the climax. Bitcoin isn't just about price anymore. It's about a battle. A battle between centralized control versus decentralized freedom, government-issued money versus people-powered currency, surveillance finance versus privacy finance. Whether Bitcoin hits 100K or crashes to 20K, this technology is reshaping the foundations of who controls value in the modern world. And that fight is just getting started. Bitcoin's price, 100K or not, is just the surface. What's really happening is much bigger. Institutions are finally in. Governments are fighting back. The world's financial system is cracking. And a new generation is choosing code over corruption. Whether Bitcoin thrives or falls in the short term, its impact is permanent. So now the question is, will you understand it before it changes everything? If you want to understand how AI and blockchain together are building the future of money, watch the video popping up right now.